Have you ever looked at your bank account and thought, man, I wish I could qualify for that dream car or home? Or maybe you've been turned down for a credit card and wondered why. The answer might lie in three little letters, TUF. That's right, Transunion, one of the big three credit bureaus. Your credit score, a number generated from information in your credit report, is like a financial report card. And it can make or break your chances of getting approved for loans, credit cards, and even jobs. So, let's dive into how to build that Transunion credit score and put you on the path to financial freedom. First off, let's clear up a common misconception. There's no magic formula to instantly boost your credit score. Building good credit takes time and responsible financial behavior. It's like building muscle. You can't expect to bench press 300 pounds overnight. But with consistent effort, you can see significant improvements. So, what exactly is in your credit report? Well, it's a detailed history of your credit behavior. Think of it like a financial resume. It includes information about your payment history, how much credit you're using, the types of credit you have, and how long you've had credit. Now, let's talk about the factors that impact your credit score. Payment history is king. Paying your bills on time, every time, is crucial. Late or missed payments can seriously damage your score. Next up is credit utilization. This refers to how much of your available credit you're using. Aim to keep your credit card balances low compared to your credit limits. A general rule of thumb is to use no more than 30% of your available credit. The types of credit you have also matter. A mix of credit cards, loans, and installment accounts can be beneficial. Length of credit history is another factor. The longer you've been managing credit responsibly, the better your score. And finally, new credit inquiries. Every time you apply for credit, an inquiry is added to your report. Too many inquiries can temporarily lower your score. Okay, so how do you actually build your credit? Start by getting a credit card. It's a great way to establish credit history. But be careful not to overspend. Use it for small purchases and pay off the balance in full each month. Next, pay your bills on time. This includes not just credit cards but also rent, utilities, and any other loans. Build a good payment history. Another tip is to keep your credit card balances low. As mentioned earlier, aim for under 30% of your available credit. You can also consider requesting a credit limit increase. This can help lower your credit utilization ratio. Monitoring your credit is crucial. You can get a free credit report from each of the three major credit bureaus once a year. Check for errors and dispute any inaccurate information. You can also consider using a credit monitoring service. Now, let's talk about some common credit myths. One is that you need to close old credit cards to improve your score. This isn't necessarily true. In fact, keeping older accounts open with a good payment history can actually help your score. Another myth is that authorized users can build their own credit. While it's possible, it's not guaranteed and can be risky. Remember, building good credit is a marathon, not a sprint. It takes time and discipline. But the rewards are worth it. A good credit score can save you money on interest rates for loans and credit cards. It can also help you qualify for better rental apartments or even jobs. So, start building your credit today. It's never too late to start. By following these tips and being consistent, you can improve your financial future. With that said, thanks for watching and until next time.